Market rally 6.3% in 2 days. Is there more to go? We'll talk about that today on 3 Minutes on Markets and Money. The markets are up 6.3% in 2 days. A very strong rally on the S&P, of course, now very close to triggering our MACD buy signal. Now, we've seen this before where the MACD was close to crossing but didn't quite make it. In fact, that rally failed and we went down to test new lows. This time a little bit different because markets are extremely oversold here and sentiment very negative, MACD at a very low level. So again, this is much likely a better signal for a MACD buy signal cross here. Also, markets were very oversold, have turned up here. They're not overbought just yet, so there's likely a little bit more life left in this rally here near term. But doesn't mean that we're not going to have a bit of a pullback here just after a very strong rally over the last 2 days. Could be here an opportunity to add a little bit more exposure to portfolios from a trading perspective. There's also some other supporting evidence that we could see a bit more of a rally from here. One of the things that we talked about previously was the fact that this market's had a very subdued volatility during really this entire bear market so far. But in the month of September, volatility did have a very strong pickup here, actually breaking above 30, kind of triggering off that bear market warning signal. However, over the last couple of days, we've now seen a nice drop off in volatility, and we're about to trigger a sell signal on the volatility MACD. Now, again, volatility runs inverse of the stock market, so a sell signal on volatility is technically a buy signal for stocks. We should see volatility continue to drop off here if that does occur, and that would also be supportive of some rising stock prices near term. And of course, bonds themselves are also telling us a little bit that we might get a corresponding bond market rally as well as a stock rally here over the course of the next couple of weeks. As with the volatility index as an inverse indicator to stocks, interest rates are an inverse indicator to bonds. And of course, what we saw here previously, we talked about this on the show, is that interest rates had gotten extremely extended above their 50-day moving average and have now been selling off here over the last couple of days along with this stock market rally. In fact, rates were starting to come down even before stocks gained some traction in the markets on Monday. But we have triggered a MACD sell signal on interest rates. And again, that's inverse to bonds. So the sell signal here is a buy signal for bonds. So we could see a period where we might see a little bit of choppiness here over the next couple of days as, again, a lot of trap longs. People saw this rally. Hey, opportunity to get out of stocks. But again, there's a good indication here that we could see a bit more to this rally here over the next couple of weeks through the end of October, maybe even to mid-November, particularly as we move into the seasonally strong period of the year, which begins now. But as mutual funds, hedge funds, pension funds all have to rebalance for the end of the year, there's a lot of cash on the sidelines. That needs to get put to work. If markets continue to rally, there'll be performance chasing. And as we've talked about before, there's a very large short position out in the markets that still, while that has started to reverse, still has a ways to go. So there is some fuel here for a rally in the markets a bit more. But again, a little bit of weakness today, not surprising after a big 2-day rally. Could be an opportunity to add a little bit of exposure just for a trade here. Again, our target 38, 3,900 on the S&P. Take some profits there. If we go further than that, that's great. Continue to sell the rally because once we get into next year, going to be a very different story most likely. That's 3 Minutes on Markets and Money. See you back here tomorrow.